From New York to our TV and radio audiences worldwide, this is Balance of Power, where the world of politics meets the world of business. I'm David Westin. We'll get started today with a check on the markets. For that, we go to Abigail Doolittle. So, Abigail, a little bit up, but not very decisively so on the first day of the new quarter.
Wishy-washy indeed, David. Investors really not knowing what to make of this year because, of course, that first quarter, huge down quarter, brief bear market, and then the last quarter, the best quarter for the S&P 500 since 1998. So here we are, very small moves for stocks overall. Lots of uncertainty, despite the fact that we had that better than expected ADP number. ISM coming in stronger than expected, suggesting that the manufacturing part of the economy is back in expansion. But again, wait and see mode, and perhaps worrisome for the bulls, David. The sector composition earlier had been bullish, but now we're taking a look at some of the cyclical sectors trading to the downside. Energy down about 1.7%, even though oil is higher, and the financials are also down, even though yields are higher. So again, a little bit of a pause, investors wanting to make sense of what's going on. Of course, that big jobs report tomorrow, and it is a holiday shortened week, so some traders may already actually just be taking off, especially after all of the action earlier this year, David.
Yeah, exactly. It's been exhausting for traders. So you mentioned that we had the best quarter, last quarter, second quarter we've had since 1998. At the same time, that might not be necessarily good news, because I saw a note from you that said historically, if you go back to really big shifts in the market, often there's a retest of the bottom.
Yes, there is. And if you go back to the Great Depression, there was a retest about 6 months, 7 months after the low made in 1929. Similar situation in the bear market in mid-1970s. In 2000, there were several tests that went lower. 1987, even the long-term capital crisis, 2008. So all of history does suggest that we're likely to see some sort of a significant testing of the S&P 500 lows. There are also some options experts that I frequently talk to that think that there's signs of some sort of a correction coming. When that may come, however, David, is unclear, because it seems as though investors are really just going with the Fed and the central bank liquidity. So unless there is some sort of a systemic shock, and let's hope that there's not, that sort of undoes what the Fed has been able to implement here and support markets, it seems as though stocks want to go higher. But history does suggest each and every time in the past that there's been a bear market that there will be some sort of test of the lows, David.
Yeah, I think we've had our share of systemic shocks already this year. Thank you so much to Abigail Doolittle. Well, the markets seem to be caught between a virus that just won't go away and stimulus that seems to know no bounds. To get a read on really where things are and where they're headed, we turn now to Wall Street Week contributor Afsaneh Beshloss. She is the founder and CEO of RockCreek Group. So, Afsaneh, it's always great to have you with us. You have a great new note out this week. It's called Tug of War, which sort of illustrates what I was just saying. What's an investor to do caught in between these two really powerful forces?
Investors are very confused, as you said. And I think the data that they're seeing is as confusing as the data that the Fed is seeing, David. What is happening also is that investors were always keeping like a 70-30 or a 60-40 portfolio in the old days, where whether you were a pension fund or an individual, you kept a certain share of stocks and bonds. And now you're seeing that your bond portfolio is going to earn you zero. So suddenly, I think a lot of individuals are pushing themselves into investing more in the equity market. So part of it is the psychology. Part of it is the physical fact that you're not earning any return on your bonds, unlike the last 10 years. So you have to find some returns. And that is one of many reasons that people are moving in this direction. Pension funds, on the other hand, and institutional investors are being a little bit more careful. They are keeping their relative shares of equities still at the lower end. And so if you look at sophisticated and more institutional money, it's going a different direction than retail.
Are people just holding on to more cash, not sure exactly what to do? It doesn't seem to be worth it to reinvest it in bonds right now with almost zero returns, but equities are fairly valued, I think.
Absolutely. And I think what has happened is also it's sort of a barbell, as you said, cash and equities. The other side, and the numbers that you were just going through, David, with Abigail, show that, in fact, while markets had one of their best quarters just now, 5 stocks, if you look at the S&P 500, went up about 20%. The other 495 stocks were, in fact, down 4%. And if you went globally, you would see the same facts. And I think there's a huge push. We have seen that really in the last 10 years, since 2010, but very exaggerated at very rapid speed in the last 3-4 months, where people have been moving into mega stocks. So the share of mega stocks in the US in 2010 was 5% of, let's say, MSCI, and now it is close to 36, 37%. So that shows you that people are moving into a very different direction. And that is sort of another indication why small companies are not doing as well, small businesses are not doing as well.
And Afsaneh, it may be just as simple as I'm going to go to a really big company because I'm pretty confident they're going to survive what happens because of the coronavirus, because that is always out there lurking. It is an unknown, and you want to make sure you're investing in companies that are going to make it.
Absolutely. And I think the same thing is happening throughout the whole economy. So the reason the investors invest in the bigger companies is they want them to be around, right? Uncertainty is at such high levels. So I think that is one element. And by the way, I was talking to our friend Alan Greenspan. And Alan, I'm very fortunate, is one of our senior advisors at RockCreek, and he reminded me of the whole conversation that he had a long time ago about irrational exuberance. So we should put that in this bucket also, because irrational exuberance has also been pushing people, as well as moving into the larger stocks that will be around in 5 years. So I think both factors are pushing people into that part of the economy.
I also want to talk to you about something you've been focused on for a good long time, and that is ESG, environmental social governance. As we try to pick through, investors try to look for the places to put their money in this very difficult time. How much is that really coming to the fore, particularly because of the coronavirus? It really has driven us, particularly on the things like social, that perhaps we weren't as focused on before.
Social has become very important because everybody, every family, every person is involved with their health crisis and their financial crisis and their health crisis. They're seeing that the coming together of technology and telemedicine, but also technology and the huge data that has allowed us to move towards a vaccine and towards a treatment for this COVID-19 has been so interesting, so different than the development of any other vaccine. And we're seeing there are a lot of announcements the last couple of days about the social part being actually the part that has been getting capital. So you have seen a lot of money go into the health sector by very sophisticated investors. And it's not seen as just something that you're throwing away. It's actually seen as some of the highest return areas for investment.
Is there enough reporting from publicly traded companies to really give investors an accurate read on their rating on environment, on social that you've just been talking about as a governance? Because that seems to be a problem. There's no uniformity, is there, of reporting?
So at RockCreek, what we realized is that if you look at the, let's say, the Bloomberg indicators, or you look at MSCI or look at the RockCreek ones, they're all going to end up in different places. So we came up with a technology that is basically going to look at each of these factors and rate using the different rating systems. So if you use the Bloomberg system that has done a lot on sustainability, we can apply the technology and use those factors. We can use our own factors because, as you said, there is, as of today, no one agreed upon methodology and not one agreed upon way of measuring impact when it comes to either social or even the governance part of this. That part that is very easy to measure, obviously, is the environmental part. Then it's the governance part to some extent, but that has some sort of cushy areas that are harder to measure. And then obviously the social is the hardest. But I can tell you, I was doing social shadow pricing in the 1990s at the World Bank, and it is still very relevant. And you can use some of that methodology for coming up with social measurements.
And finally, Afsaneh, one other item that you raised in your note, and that is the apparent, if it's a word, de-urbanization. People really increasingly moving away from cities because of various factors, even before COVID-19, certainly exacerbated here. What does that say to investors? What does that make more attractive for an investor?
So I think housing has been a big problem for investors and for all of us. So if you look at housing, most of the money that has gone into housing has gone into luxury housing, and very little has gone into affordable housing. And that has resulted in major problems in cities where the supply of affordable housing has gone down, and also housing even for middle-income families, such as firefighters, people who are fighting for us on the front lines, teachers, has not really been available and has taken more than half of their income. So you're finding both the economic effects of inequality that we've been talking about, as well as the fact that COVID is telling you you do need to social distance. You saw that density of population leads to more disease, is pushing people. And that has led to huge number of new contracts in housing.
Fascinating. Thank you so much, Afsaneh. Always great to have you with us. That's Afsaneh Beshloss. She is the founder and CEO of RockCreek Group. And a program note now, at 9 p.m. Eastern Time Friday evening, we're going to have a Bloomberg special called Unequal America. We'll take a look at the great and growing economic inequality in the country. That's coming up at 9 p.m. Eastern Time on Bloomberg, and you can also catch it online. Meantime, right here, we're going to take a look at the new Hong Kong security law and what exactly it has done. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Westin. It is time now for First Word News, and for that we go to Mark Crumpton.
David, thank you. Former National Security Advisor John Bolton isn't saying whether he personally briefed President Trump on intelligence, indicating that Russian operatives offered bounties to kill American troops in Afghanistan. But Bolton tells Bloomberg that the president's evolving explanation since the publication of the New York Times story sends the wrong message to Russia.
What it tells the Russians is we are in disarray. And ripe for this kind of provocation, not just in Afghanistan, but in many other places around the world.
The president has publicly rejected allegations about the bounties. He tweeted today that it was fake news made up to damage him and the Republican Party. Florida had nearly 50,000 new cases of coronavirus in the past 7 days. That's the highest since the pandemic began. And the state says the rate of people testing positive for the first time jumped to 15%. Florida has had 159,000 confirmed coronavirus cases. The pandemic will cost the global tourism industry at least $1.2 trillion this year. That's according to a new report from the United Nations. The agency says that total could balloon to $3.3 trillion if travel restrictions and consumer wariness continue until March of 2021. The collapse of tourism could cost Jamaica 11% of its gross domestic product and reduce Thailand's GDP by 9%. European Union member states aren't making much progress in talks on a coronavirus recovery fund and the bloc's next budget. German Chancellor Angela Merkel said they remain far apart. It was the first day of Germany's 6-month EU presidency. The member states are trying to bridge differences ahead of a July 17th summit meeting, when the bloc will try to advance plans for an $840 billion rescue package. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks very much, Mark. Well, a new security law went into effect today in Hong Kong, and overnight 300 people were arrested, although only 9 of those were under the new law. To explain to us how things have changed in Hong Kong because of this new law, welcome now Stephen Orland. He is president of the National Committee on U.S.-China Relations. So, Steve, welcome. Great to have you with us. For those of us who are not really very current with exactly what's changed, what does this new law do that the old law didn't?
Well, the new law was kind of enacted as a result of these democracy demonstrations that, from the perspective of a bunch of people in Hong Kong, were blocking the ability of businesses to do business. Airports got closed, subways got closed down. But the demonstrators were interested in democracy. They were interested in kind of having a more direct say in the rule of Hong Kong. What the law does is it prevents what the NPC, the National People's Congress, is saying: separatism, subversion, terrorism, and collusion with foreign governments, with foreign countries. The trouble is, it's very ambiguously worded. and it gives the authorities a lot of power to target activists. So what happened in the last 24 hours, as you pointed out, is people did things which, if they did them 36 hours ago, would have been legal. So if you hold up a flag which says you want an independent Hong Kong, that now becomes advocating separatism and becomes illegal. So the police got instructions to arrest those people, and as you point out in your newscast, 9 of the people got arrested. So it's a new world. One of the good things that happened is the law was not made retroactive. So if you demonstrated yesterday and you advocated independence, you are not arrested for what you did prior to when the law was enacted. But if you do something subsequently, they then can use your behavior prior to midnight last night to demonstrate, to argue for a stronger sentence, to kind of argue that you're a recidivist and need to be detained for a longer period of time. So for terms of the media, in terms of activists, in terms of democracy activists, it's a dark day.
So that's in terms of politics, in terms of the social order. What about in terms of business? How's the business community likely to react? I mean, you have an extensive business background at Carlyle, at Lehman, things like that. How are Hong Kong businesses going to react to this? Is this bad for them? Is it good for them? Do they know?
I think they don't know. The businesses I've talked to are basically taking a wait-and-see attitude. Is this really going to affect their ability to do the business that they do, to retain talent? In other words, both the UK has now offered hundreds of thousands of people in Hong Kong the ability to emigrate to the UK, something that they didn't do in 1997. The United States is talking about doing something similar. If that gets done, then you're going to have a talent emigration. You're going to have an outflow of talent, and that's going to affect your ability to do business. If media is constrained the way it is in China, that if in my old business at Carlyle and at Lehman Brothers, I needed a free media to tell me what was going on so that I can take that reporting and put it together with kind of our micro analysis of individual companies. If that is restricted, that is going to have a major effect on financial services businesses in Hong Kong, which is very important. Having said that, what we've seen in the lead up to the passage of this law is a huge influx of capital market activities into the Hong Kong market. I think Bloomberg, you've reported that it's $20 billion of new issues. That's being driven, one, by a desire to show support of Hong Kong. Second, by U.S. activities that are causing Chinese companies to question whether they're going to be able to continue their listings in the United States. So oddly, we are taking positions which require, by saying, if you don't have this, if you don't allow the accountants to have access to your records, you're not going to be able to stay listed in the United States. Well, what that's doing, it pushed Alibaba, JD.com, NetEase to do these secondary listings in Hong Kong, which is great for Hong Kong. That's business for the Hong Kong exchange. It's business for lawyers in Hong Kong. It's business for accountants in Hong Kong, for consultants in Hong Kong. So oddly enough, some of this tension in the U.S.-China relations, which is generally very bad for Hong Kong, in this case is not bad for Hong Kong.
Isn't that ironic? At the same time, Steve, finally here, is there much the United States can do about this? We hear a lot of complaints coming out of lawmakers, some activity up in the Senate and things like that. But is there much the United States can really do to affect China's behavior in Hong Kong that doesn't hurt the United States every bit as much as it hurts Beijing?
Well, I think that's a very good point. Some of what we're doing hurts the United States more than it hurts Beijing. What most troubles me about a lot of these kind of policy prescriptions is it's hurting the people of Hong Kong. That it's not hurting the people who have put forth this bill, who have kind of put in place what are excessive measures to deal with the issues of separatism, subversion, terrorism, and collusion with foreign countries. Not punishing them. It's punishing the average person in Hong Kong. Decisions like not allowing the Google cable to go to Hong Kong is that really punishing the Chinese? I would argue it's punishing the folks who work in technology in Hong Kong, which basically supports the people of Hong Kong. So we need to be careful when we craft these policies that we not punish the people of Hong Kong. We punish the people who are behind these policies.
Okay, Steve, really appreciate you being with us. That was fascinating. Steve Orleans, he's the president of the National Committee on U.S.-China Relations. Coming up later in this program, we're going to talk with General Stanley McChrystal about those reports about possible bounties placed by Russia on U.S. soldiers in Afghanistan. That's coming up on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. It's time now for Stock of the Hour, and it's Pfizer. Its shares are rising on news that it, along with its German partner, have done some tests of a potential vaccine for the COVID-19 virus that have been encouraging. To explain it all to us, we welcome now Kaylee Lines. Kaylee?
Yeah, David, it's absolutely right. They tested a possible COVID-19 vaccine candidate on 45 adults, and the early results indicate that it's safe and it prompted an antibody development in all of the patients, the highest level of antibodies showing up in the group that got 2 shots of the product. So this sets them up pretty well in the race to develop a vaccine against the coronavirus. Broadly, analysts on the street pretty positive on the news today, agreeing that it seems promising, though some, including our own analyst here at Bloomberg Intelligence, very rightly pointing out that it's a little bit too early to celebrate. Still, there's a long way to go to prove that it can actually protect against the infection. As for what comes next, David, they have 3 other candidates in the pipeline. The one that works the best will move on to the next stage. That could start as soon as August, and those trials could be as large as 30,000 patients.
Yeah, and Kaylee, just briefly here, does this help the other candidates or hurt the other candidates? Because does it mean, is it rising tide lifts all boats, or, oh my, they're going to win, we're going to lose? Well,
it's interesting you asked that question, David, because actually a number of companies that are developing other vaccine candidates are lower today. I'm thinking Inovio, Moderna, they're all actually down on this Pfizer news. I was reading research from one analyst over at Evercore ISI, who said the third quarter is going to be all about vaccines, because we know there are a number of companies racing to get one on the market, David.
Yeah. We'll look forward to that for sure, and you'll report to us. That's Kaylee Lines. Thanks so much. Coming up next, it's coming up with the 10th anniversary of DODD-FRANK. We're going to talk with one of the principal architects of that statute. He's Michael Barr of the University of Michigan, and this is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. It is time now for First Word News, and for that we go to Mark Crumpton.
David, thank you very much. New York City will delay reopening of indoor restaurant dining, which had been planned for July 6th. Mayor Bill de Blasio said today the decision was made with the state. The mayor says he wants to help restaurants survive, but it has to be done safely and outdoors. The UK will take a chance on raising tensions with China even more. Prime Minister Boris Johnson's government will allow almost 3 million Hong Kong citizens to move to the UK. The Prime Minister made the announcement the same day China's new Hong Kong security law took effect. Mr. Johnson says the law violates the 1984 agreement on the city between the UK and China. Russian President Vladimir Putin is on a track for a big win. An exit poll shows that 76% of voters support a revised constitution that would allow Mr. Putin to stay in office until 2036. President Putin's current mandate expires in 2024. His approval ratings have slumped while Russia's economy reels under the impact of the coronavirus pandemic. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. Well, July 21st will mark the 10th anniversary of DODD-FRANK, that legislation that was enacted to try to make sure we didn't have a repeat of that great financial crisis we had back in 2008, 2009. For a review of DODD-FRANK, we welcome now Dean Michael Barr. He is the Dean of the Gerald R. Ford School of Public Policy at the University of Michigan. And Dean Barr was one of the principal architects of DODD-FRANK when he was working at Treasury back around the time of the great financial crisis. Dean Barr, thank you so much for joining us. Give us your sense now of DODD-FRANK, how it's held up, and particularly how it's holding up in the middle of a COVID-19 crisis, something no one could have anticipated.
Well, I think that's right. We don't really know exactly how the future risks are going to play out. We certainly didn't anticipate 10 years ago that there would be a global pandemic today. But the framework that was put in place in DODD-FRANK, I think, has been quite resilient. It established a much safer system, a fairer system than we had before. But I want to say that, our financial system is not really safe enough or fair enough yet. And there are more risks to come in the financial system. I think we still need to work on a financial system that works better for households and businesses. And we're not there yet. I think that on the positive side, go ahead.
No, please, you go ahead.
I think on the positive side, there's a lot more capital in the system, so there are bigger buffers in the system in the event of failure. And that makes the financial system more resilient. You've seen the major financial institutions and community banks able to lend in this economy to businesses and households, which is so critical to us in this period. And I think that, the issue is, are we going to have the resilience we need to make it all the way through the crisis? And there, I think there's some uncertainty that was revealed in the last round of stress tests.
Well, let's talk about the stress test. That's exactly where I wanted to go, because I think everyone pretty much agrees the banks are so much stronger and healthier than they were back in 2008. Good on you. That's terrific. At the same time, are they tough enough, the stress test? One of the ways that we're trying to implement DODD-FRANK, and does it really contemplate the possibility of an L kind of shaped recovery rather than a U or a V?
I think that's exactly the right question. Look, in my view, in the last few years, I think that the Trump administration appointees have really lightened up in ways that I think were inappropriate, both on the stress tests on an aspect of capital and liquidity rules. And so the stress tests were not strong enough coming into COVID-19. Obviously, the COVID-19 situation just completely upended any of the models that were in those tests. And so the Fed included a component of looking at the particular effects of this crisis. And as you suggest, they mostly focused on a V path or a W path of recovery and didn't really get to an even worse case scenario, an L path, where we just stay at a low level of growth for an extended period of time. And, my own view is it would have been smart to do that. I think the other problem with the stress test is that they did not release individual results about those COVID scenarios. And the thing that is reassuring to the market and helpful to the public is to actually have data on particular institutions. That's why the 2009 stress tests in the midst of the financial crisis, I think, were successful at calming the market because they were transparent. And there's really a lack of transparency here. I think the other issue coming out of the stress test is that although the Fed, coming out of the stress test, agreed to block share buybacks, they're letting the largest financial institutions continue to pay out dividends, which is depleting capital at a time when we need them to be conserving capital or perhaps, I would argue, raising more capital.
One of the issues that popped up right at the beginning of this crisis was the problem with the short-term funding markets, things like repos and money market funds. Did the system hold up adequately there? On the one hand, the Fed stepped in and sort of fixed the problem. On the other hand, the Financial Stability Oversight Council, did it really, FSOC, do the job that you hoped it would do, or did it fall down a little bit on the job?
I think that a critical issue has been the lack of serious reform of money market funds. Coming out of the financial crisis, we didn't include that in DODD-FRANK because the SEC had the authority to undertake the necessary reforms. And eventually the SEC took some steps, but those were not steps that were serious enough to deal with the extent of problems in money market funds. And I think you saw that right at the very beginning of this crisis. Treasury and the Fed stepped in right away to provide support for that sector. I think similarly, the disruption you saw in March of this year largely arose because of highly leveraged hedge fund activity in the Treasury markets. And, the lack of FSOC attention to hedge fund issues, I think, is a serious mistake. So I think there's a lot more work to do. As I said, the DODD-FRANK Act itself is not perfect, but I think the framework is resilient. What we need are regulators and institutions that are, up to the task of keeping us safe.
Yeah, Dean Barr, you mentioned the fact that we need actually, if anything, more protection. We had a constitutional challenge to the CFPB, which was an integral part of the protection for consumers here. It was rebuffed, although they said the president could fire the head of the CFPB. Is that a robust enough institution at this point to do the job that you anticipated it should do?
Yes, I think the CFPB, the Consumer Bureau, is quite strong. Even after the Supreme Court ruling, it maintains independent funding, independent rule writing, and supervision. There are a wonderful group of career staff in that agency who are looking out for households. You have kind of a crowdsourcing mechanism there where the public weighs in through the consumer complaint database that's public. You have state attorneys general able to enforce federal law. So I think the basic framework is there. I think what we've seen in the last few years, though, is that, again, the Trump administration appointees have rolled back a number of protections, for example, on payday lending, enforced arbitration clauses. They've weakened enforcement. And I think that needs to be reversed. And particularly right now in the COVID crisis, we've got millions of people who are potentially exposed to abuse. We need an agency that's looking out for them right now.
Okay, thank you so much. Really great to have you with us. That is Dean Michael Barr of the Gerald R. Ford School of Public Policy at the University of Michigan, one of the architects of Dodd-Frank. And a programming note now, at 9 p.m. Eastern Time on Friday, we're going to premiere a Bloomberg special. It is called Unequal America. It'll take a look at economic inequality in this country, how it is growing, what could be done about it. That's a Bloomberg special on Unequal America. It is 9 p.m. Eastern Time here on Bloomberg and also online. Now, coming up right here on this program, we're going to have an exclusive chat with General Stanley McChrystal about the crises facing America today. That's coming up on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. Afghanistan is back in the news on reports that perhaps Russia offered some bounties for the killing of U.S. soldiers over there in Afghanistan, raising questions about what the United States is doing in Afghanistan, our relations with Russia, and more broadly about leadership in this country. All subjects of which General Stanley McChrystal knows a very great deal, having served as the commander of National Security Forces Afghanistan. He now is a founder and CEO of McChrystal Group, and he also is the author of a book on leadership, which is called Leaders, Myth and Reality. General McChrystal, thank you very much for being back with us. Appreciate it. I'm not going to ask you about the specifics of Afghanistan, but what does it tell us about where we are in Afghanistan? We're still over there. It seems like we can't quite get out. Why is Afghanistan strategically important for the United States?
Well, that's a great question, because you could argue that it's over in the middle of nowhere. It's a landlocked country that doesn't have a tremendous number of resources that we are required to have. Traditionally, it was part of the Great Game, and so Britain and Russia fought over it as a buffer zone to protect British India. For us, I think it's more of a global idea. It's the idea that we went there in 2001 on our decision after the the 9/11 attacks. We basically overthrew the government, the Taliban government, and then we felt we had a moral requirement to stay there to help them put together a new government, and also a practical requirement to help get some stability in the world. Now, we can argue that it's far enough away that it just doesn't matter. I am not in that camp, but it's hard to stand and say that it is right at a key place in the world that we have to have. So I won't try to make that argument.
Is it strategically vital to Russia, on the other hand? I mean, they went back in there over in the 80s, and they got their nose bloodied, I think it's fair to say. At the same time, they can't quite let it go either. Or is this more a matter of trying to really get at the United States through a surrogate?
I really think it's more the latter. I think Russia would like to tweak our noses a little bit where they can. They've done that in the past. Remember in the 1980s, of course, that was during the Cold War, but we funded the Mujahideen. We gave them stingers, in fact, which was one of the reasons the Soviet attempt to remain in Afghanistan failed. So there's a history there, and I'm sure that there's a tremendous number of people in Russia that would like to do the same to us.
And General McChrystal, what about the notion of putting bounties on foreign soldiers' heads? Is that outside the rules of war? Is that different from simply arming people who will use the weapons to kill our soldiers?
Well, I think it's a difference without a distinction. I think that it's not a good thing, particularly if we are, going to have good relations with Russia, theoretically. But at the same time, it's the kind of thing that has been done historically for a long time. So I don't think we should be outraged by the act. What we should do is put that into our calculations of our relationship with Russia. And an ally or someone you do business with doesn't do that to you. And so I think that should color how we react to the entire Russian Federation.
And if this proves out to be plausible intelligence, supportable intelligence, is there an impetus to have to do something to react? Because otherwise you're sending a message to Russia, which, as you say, is not an ally at this point, that we are weak.
I think we've got to show that that's not the kind of thing that we will tolerate, particularly quietly. I mean, you can start by just making public pronouncements if you have good enough intelligence to do that. You can do some things on the ground that push back in other places in the world as well. This is a chess game for years between great nations. So I think there are things we can do. We've got to signal that we are firm. We don't have to signal that we are vengeful, but we have to signal that we cannot be trifled with.
General McChrystal, to broaden this out, to talk about leadership more broadly, I mean, you have done it, you have led, you have written about it, you've studied it. Tell us about the leadership we need right now. We have a rather unusual circumstance with perhaps 3 different crises facing the country at the same time. A pandemic, an economic crisis that followed on the pandemic, and also civil strife, really, over the continued systemic racism. What sort of leadership do we need right now? And maybe more important, what kind of followers do we need? Because often we learn as much about us in crisis as we do about our leaders. After 9/11, I think we learned some things about the United States of America that were encouraging.
I think that's right. David, I think what we need, I'll start with followers, is we need to be the citizens that we believe citizens should be, how we treat fellow Americans, how we treat fellow people in the world. We need to be the followers we would like to have if we were in a leadership position. We need to understand that sometimes things are hard, and they're hard for everybody, and we've got to pull ourselves up by our bootstraps and move forward. I think we have a tendency to be selfish sometimes. I think we have a tendency to be myopic, and that is beneath the American character. I think we are better than that. I know we are better than that, and we can do it. And what kind of leadership do we need to do that? We don't need a particularly anointed person as leader. The woman or man that leads the United States doesn't have to be brilliant, doesn't have to have all the answers. They have to have 2 things. They have to have character, and I call that the amalgamation of values, integrity, steadiness, and they have to have judgment. They have to be able to surround themselves with people better informed and smarter than they are that can influence them toward the right outcome. No one person's going to walk in with all the answers or solutions. That's just not realistic. And when you study history, it's never been the case, although we sometimes want to cast it in that light. So I think we need to be thinking about a leader who pulls a team together, team around them to govern, and then a team of the United States. As bad as COVID-19, it's an extraordinary opportunity. It's an external threat facing every country in the world essentially the same way. It ought to be the most unifying pressure we've ever gotten because it's a them that we don't have to hate. We can use it to unify ourselves. We can use it to galvanize people into action. The things like the economic challenges that it creates are also things that we should roll up our sleeves and say, these are hard, but we will work our way through them. So I actually think it ought to be an opportunity for us to show us who we are to ourselves who we are, and for leaders to stand up and ask us to do that.
So, General McChrystal, you refer to history, and I think there's a tendency to look back over American history and say we've had some pretty bad crises before, but there has been some outstanding leader that stepped up. FDR during World War II, Abraham Lincoln during the Civil War, the Founding Fathers, you could name them, back during the Revolution. As we approach our nation's birthday here, is that putting too much pressure on individuals at this point? Do we need an Abraham Lincoln, an FDR, George Washington right now to pull us through this?
Well, if you looked at Abraham Lincoln's career before his election in 1860, it was not that impressive, one-term congressman. If you look at Franklin Roosevelt, although governor of New York, in many ways he wasn't taken seriously by many people in the Democratic Party or the world. And the point I'm making is often the circumstances in which they are put make the person. We would never remember Abraham Lincoln if it had not been for the Civil War. But the reality is they rose to the occasion. Look at Abraham Lincoln, surrounded himself with the famous team of rivals. He had to work his way through a tremendous number of mistakes in the first 3 years of the Civil War before he finally gets comfortable in the job and can actually carry it forward. But all the time, he has values, he has character. All the time, he is trying to do the right thing. So I think that we don't have to wait for a person on riding a white steed to come down that is going to save us from our problems. I think we just need someone who can pull us together. We can do it. We just need to be unified to be given the opportunity to do it.
Well, and finally, for now, at least, General McChrystal, give us an insight into your leadership, because there's a terrible tendency, I think, for leaders to wish themselves to success. Someone once told me that's the worst mistake you can make in business, at least. How do you separate the facts and look at the cold, hard facts, even though you want so badly for it to be different?
Well, that's right. And sometimes leaders are accused of lying, but in reality, they're often lying to themselves. They're just describing things as they wish they were. I made a lot of mistakes in my career, and I keep making them, and it just bedevils me. As I get older, and one of the things I've learned is there's really nothing wrong with saying, I don't know. Somebody comes to you with the answer and they say, oh, leader, what's the answer to this? And if you don't know, just say, I don't know. Let's find somebody who does. People will understand that and respect the honesty of it. I also think that when you make a mistake, the first person you have to admit it to is you, because we have this tendency to say, well, I didn't really screw it up, or it wasn't really a mistake, but you know it was. So the first person you have to convince is you. And then I think it's okay to tell the team, hey, I got it wrong. I made a mistake here. Now, in some cases, we worry we're going to lose legitimacy or credibility because we've got this idea that great leaders are perfect. They are not. And I've gotten to the point in my life where I'm very happy to admit that I am so far from perfect, I can't even see it from here. But one thing is, if we all keep trying to be better, if you go to bed every night saying, I didn't do that well today, but I won't make those mistakes tomorrow.
General McChrystal, that's terrific. I'll add one more, that I've learned to listen to people who've done it like you've done it. And so it's really important to listen to you. Thank you so much to General McChrystal of the McChrystal Group. We're going to continue with him over on radio in our second hour. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. Earlier today, John Bolton, the former National Security Advisor to President Trump, appeared on Bloomberg Television and Radio for an extensive discussion about his experience in the White House. One of the things he talked about was negotiations with the Chinese, how he was in the room, and in fact, it was complicated, but in fact, President Trump was really asking for soybean purchases as part of the deal with the Chinese.
there are a lot of things that are done in an effort to keep policy on track. In that case, there were extensive negotiations underway for what turned out to be a partial trade deal. There wasn't any way to take those words back. And I believe in the records of the Chinese government 50, 100 years from now, when they're probably released, you'll see their notes as to what the president said in that meeting. There wasn't any doubt in my mind on the Chinese side. They understood what was going on. It was not the only occasion where this comment about buying agricultural products was made. You have to go on doing the job that you're assigned to do on a variety of fronts, not just how many soybeans China buys in the next year, to try and keep policy on track.
That was John Bolton, former National Security Advisor to President Trump, speaking earlier on Bloomberg Television and radio. In the second hour of Balance of Power on radio, we're going to have more with General McChrystal about the naming of U.S. bases for Confederate war generals. We'll also talk with Representative French Hill of Arkansas. This is Balance of Power on Bloomberg Television and on radio.